Hey everybody, hope everybody is well. Today is Wednesday. Hope everybody's having a great day. Just wanted to touch base and talk about an important topic people have been asking about regarding leasing and financing. So we're going to continue this leasing versus financing series. Once again, there's a lot to cover here that one video cannot justify it. So today, I'm just going to cover in terms of your leasing versus financing. What determines what on finance side, what determines your annual percentage rate, means what rate am I financing at, and leasing, what determines the lease tier that I'm at. Can anything change my lease tier? And the only similarities with leasing and financing is those same qualifications. So the same thing that will give you a higher rate when it comes to your auto financing, which, sometimes when you're purchasing a pre-owned car, you can get rates as, from a credit union as low as 1.9, 2.9, a private bank, maybe 3.9, 4.9, if you have excellent credit. And then obviously, as you get to the more fair credit, you'll be at maybe a 9, 10%, 12% if you're in rebuilding stages of your credit, which means your score is below a 500 or anywhere between 4 to high 500s. You'll be at the rebuilding credit tier, which with a special finance bank example like Santander, sometimes we've seen people as rates as high as 19%. And the only reason that happens is because your current credit history is not as strong and it is not as reliable to the bank. And the same thing with a leasing. The minimum score you need to be able to lease with most banks. BMW has a funny way of kind of breaking this rule for certain people depending on what you make and your debt to income ratio. But the minimum lease credit score you can have is a 620. So if you do not have a 620 or above, there's certain cases where certain banks and certain new car manufacturers might approve you, but most will not. So it's it's okay. You could still purchase a vehicle, but the rate that you're being charged for your financing and your leasing tier is going to be directly proportioned to your credit score and credit history. So this is why credit is very important, to make sure you're monitoring it, because this has a profound effect in not only how you do business when you're purchasing a home and these kind of things, but also when you're financing or trying to lease a car. So again, the worse your credit is, or the worse standing your credit is in, it's going to be tougher to get a lease. And then when it comes to financing, your rate will be higher if you are in the rebuilding credit stage, which is also okay, because once you show an established payment history, you can kind of then come back and jump back to a regular rate of return. So the gift and the curse with financing at a high rate, it's tough, but you want to pay those loans off quicker, even though it's a little bit more expensive, but it'll help you in the long run to do that. And again, so we're going to continue to dive deeper into topics when it comes to leasing versus financing. But today, I just wanted to cover those important things about APR and lease tier. If anybody has any questions, please message me. Have a great day, guys.